Hello, this is Bob Joyner, and in this video we're going to be talking about the morning gap trades, or trading the gaps as it's often called. And of course, in trading the market you can have gap up stocks where the price opens higher than it did the previous day, and you can have gap down stocks where the price opens lower than it did the previous day. So in this case, PSTH, and both of these charts are taken from June 4th, 2021. PSTH started after the previous day's close. You can see at 4 o'clock in the pre-market we started going down until we finally opened up as a gap down at 9:30. This grayed out area in here is the pre-market trading activity. And then LEDs was a high volume gap up on the same day, as you can see, and did not have that much activity necessarily compared to PSTH in the pre-market activity, but after it opened up it just shot up, as you can see there. So how do I find those stocks? Okay, that's the first thing. Is if you're going to trade the gaps, you got to be able to find a way to find those stocks and sort through a list. So in this case I'm showing you the watch list. So one of the things I'll look at is the percentage of change from the day previous. I'll also look at price because I want to trade in a certain area for the chat room that I lead every morning. Most of the stocks are between 10 and about 75 bucks for the most part. Volume is also critical though. So if we look at, and you can also look at volume buzz, which is something on the TC2000 scan. TC2000 is the software I'm showing you on this one. And so for LEDs, for example, if we look at that stock, had a big gap up, had a big volume buzz, the price is in a range where I like it, and huge volume. This is later on the day showing you. And then PSTH was a gap down, high volume buzz, good price range, good volume. So those were the ones I was looking at that day. But that's the first thing, is you've got to have a way to scan the market to try to narrow down the list of stocks you're going to be looking at. But I'm looking at basically for high percentage moves, high volume moves, good price range. Now that you've created a list, what are you going to do with it? Okay, so you have to develop a day trading gap strategy. Now I'm not going to show you all the details of what I use. I'm going to show you some things, some ideas though, and you can develop your own. But one thing is VWAP, which a lot of people talk about in videos, and it's one tool that you can use. I use it. I have it on my charts. It's not the only thing I use, however. This area here that I'm pointing to on the chart, this is what I call Kumo, which is a proprietary setting of the Kumo from Ichimoku. And then I have conditional colored candles, which are 6 different gradations of red and 6 different gradations of green on the charts. And so when all those line up, it's kind of obvious what price is doing. And then if things change, of course, you wouldn't be out of that trade. But this is an example of PSTH later on in the afternoon, but kind of shows you clearly some different ideas for trading the market. You can also use Fibonacci retracements, which I use in a variety of ways with my trading. So for example, on this one on LEDs, you could pull a retracement back from the previous day's close and go up to the high of the day, which didn't occur until after about 10 o'clock or so. And then you could see that your fib lines here based on that high of the day and starting with the previous day's close. You can see your fib lines there, and you've got a 38% fib line there drawn in orange, and I've drawn a little orange line there to kind of illustrate exactly where that 38% fib line is. So before we went up to that high, we found support in that same area, and then after the high of the day, at that point we came down and retraced back to that same area, the 38% fib line, also an area of support above the Kumo and with the VWAP there. Before I go any deeper into this video, just so you know, I've put a link in the description box for this video. I do a daily video blog every day of the charts of the trades posted in the chat room each morning. So if you want to go and check that out, you can. You can bookmark it and just go look. It's a 1 or 2 minute video every day where I just go back and I show you exactly where the entries were, whether those entries hit their stops or targets. And then of course, if you like this video, please subscribe and ring the bell so that you can hear about other videos as they are released. So your day trading strategy should include the following things, at least. an understanding of areas of support and resistance. These may be pivot lines, these may be Fibonacci lines, these may be Ichimoku based Kumo. Whatever you use in your trading, you've got to have an understanding of support and resistance. High probability entry. Measured risk assessment. This is one thing that I don't see many people talking about when they're talking about trading the gaps. But measured risk is where you have a method for determining, is this a high risk or a high probability type trade setup. Just because a trade setup is a high probability doesn't mean that you should use the same amount of equity. So that's the next thing, is you use risk-based equity position. And I've talked about all these concepts in other videos if you want to check them out. And then a stop and reverse assessment, and that's where you decide, well, if it does this, then I should be out. But I also might consider a stop and reverse type strategy, whereas instead of going long on that gap up trade, I'm now shorting it actually and making more money as it fades away. So there's all kinds of different things you can do with the gaps. You can take them as they are. You can trade against them. There's a whole lot of strategies out there for doing that. So choices to consider. One, from my perspective, is don't chase, retrace. And what that means is, instead of trying to just run after these things that are moving up quickly just because price is moving up quickly, those to me are not high probability trade situations. My choice is always to let the price retrace a bit. So don't chase, retrace. What I mean by that is don't just chase a stock because you see the price flying up and you want to get in long like everybody else, because you can get some really terrible entries and you can lose your shirt. Don't chase, retrace. Support and resistance versus blue sky. This kind of ties in with this. Some people, when they see price going up, it's just like a blue sky mentality. It's just going to keep on going. It doesn't, And eventually it hits some area of resistance overhead if you're trading long, and then eventually you can actually short it and make more money on the way down than you could on the way up. So there's a lot to consider there. News, assumptions, and technical analysis. What I mean by that is, don't trade the chart based just on news and your interpretation of the news. Let the market interpret the news for you. You do your technical analysis so that you let the charts tell you what the rest of the investors who are in the market looking at this chart are thinking. Okay, so don't assume that you know better than the market. If you're getting mad because the trade moved against you, it's probably because you got the trade wrong. Okay, it's not because the rest of the market's wrong. Basis for the trade, I use this phrase a lot. Basis for the trade is you have to have a system in place for trading the gaps. It should tell you exactly where your entry is every time. And the basis for the stop and reverse. For me, one of the things I use is I use the conditional colored candles I talked about. So for example, I'm trading a stock long, right, or trading the SPY options long or whatever, and I see different shades of red on the chart based on my conditional colored candles, then I know I'm probably on the wrong side of the trade and I should be open, if not already activating, a stop and reverse strategy on that trade. So thanks for watching. That's just a quick introductory to trading the gaps. Other videos of mine that you might be interested in, one is TC2000. Is it worth it? TC2000 is the software I've been using for, I don't know, 10 or 12 years now, and really enjoy it. So I have a video about that. And then stop loss, I have a whole series of videos on stop losses, how to create them, how to do a stop and reverse, etc. So you might want to check out the playlist for that too. And thanks for watching. Subscribe, please. Thanks.